watching Closing Trades in ET now. I'm Anisha Jain, and for now there's a bit of a red on the screen. There was that bout of volatility that we had to deal with suddenly when the markets had slipped 200 points. From there was a swing trade as well, and we saw a sharp recovery. But nonetheless, it's a volatility maybe out of the weekly options expiry or the fact that tomorrow we kickstart local elections 2024. But that's the reason there was that bout of volatility, and the index will also come up for you shortly on the screen. The broader markets are outperforming. So you have the mid-cap and the small-cap index, which is holding in the green. Metals pack is doing quite well. So whether it's the headline coming in that Biden is looking at higher tariffs from Chinese metal, or the fact that alcohol numbers were strong, there is a bit of a buoyancy in the metal names all across. Telecom, that sector continues to be in focus, even though Vodafone's figures continue to be a bit muted as of now. It's the upgrade coming from IIFL Securities that has put a bit of a wind beneath of all of these stocks, so all of them up anywhere between 4 to 5%. Other winners include Hexacom as well. Bharti Hexacom is up another 7%. ICICI Lombard, which is a result reaction, and then Mastech on account of that big order win, £1.2 billion order win. That stock is fairly excited. On the losing side, gas companies are somewhere coming under pressure. So whether it's a IGL or MGL, both of those stocks are in the red right now. Nestle continues to be under pressure, and ABB India as the downgrade coming in from Nomura, plus the fact that the global parent has reported weak sort of order inflows coming in from India. All of that has led to a bit of a red across these names. But we have Kunal Bothra as well as Naresh joining us on the technicals, and Sandeep Sabharwal is joining us to talk to us about the fundamentals. Let's start with the technicals then. Kunal, what part of this market move today, which we saw suddenly, could be attributed to maybe a fat finger error, or do you think this volatility was called for on account of expiry and elections?
Good afternoon. So I think fat finger maybe or maybe not, but I would probably believe that it's adjustment to the India VIX. The second point, which you also mentioned, that since the markets are heading towards the the economy is heading towards the elections, the markets are bound to into some bit of adjustment towards the rise in VIX, because if you look at intraday move for the markets, the sharp fall was felt into the indices specifically and few odd larger cap names. It was not felt across the overall length and breadth of the mid cap and the small cap arena. I think that's where I would probably believe that it's got to do with some adjustment with respect to larger cap names, especially on the option side specifically.
Okay, so that's the take coming in on the market and the volatility right now. But Naresh, what about the trend in the metal names? Do you see more legs to the metals rally?
Absolutely. So we've seen some of the names do well, but some of the names are to break out into major moves. And more importantly, the base metal spot prices have gone up across the board, whether it is aluminium or other names. So out here, we still have Hindalco, which is closer to making a new all-time high, not far away at 620, just $10 away from an all-time high. So that looks promising. Then Tata Steel, which broke out about 155, 160, continues to remain strong. JSW Steel should see a much bigger breakout, sustains about 890. And the leadership names have continued to do well. So Steel is close to new all-time highs. You have Nalco, which continues to do well. So the pack remains a buy on dips. Names like Hindustan Zinc and Vedanta, which have up 30-40% quickly. There could be some partial profit booking over there and a little pause. But all on a correction, still looks interesting. At current levels, Hindalco will remain the top pick.
Okay, point taken. Let's take it across to Sandeep Sabharwal as well. And Sandeep, the question is on telecom sector. Today, of course, everything is running right from a Vodafone to a Airtel to an Indus Towers, and then Bharti Hexacom, the latest entrant as well, is doing quite well. What's your top bet, if any, within the telecom sector? What's the recommendation on Vodafone FPO for retail investors?
So Bharti Airtel remains the best as a pure play telecom company, and that's something which we've known for several years now. Now the story out here obviously is that of consolidation and improved ARPUs. So ARPUs in India still are very, very low relative to what they are globally. And to that extent, there is an expectation that as Jio becomes more focused on profitability, we will see more pricing discipline and by definition higher profits for all of these companies. I think that's the play coming about. Vodafone Idea, it's very tough to figure out what's there for minority shareholders, because I believe that it's very tough for this company to ever make profits. So if it's not going to make profits, then what do the minority shareholders get out of it? I think it's just a very difficult stock for some to be recommended as a buy.
Okay, so that's a take coming in on the telecom sector. Airtel best plays right now. In fact, we put across this question to Balaji Subramanian of IFL as well, who actually upgraded the entire sector. Listen in to his take.
As far as tariff hikes are concerned, I think we should have them sometime in the second half of this calendar year. If you look at recent past, we have had tariff hikes once in every 2 years. And so we had something in the end of 2019, then we had another round end of 2021, and one would have expected something to happen at the end of 2023. But I think, elections happening in the first half of 2024, the next round of tariff hike, should happen pretty soon after the elections. So, that means that, there will be an across the board positivity for all players, especially Vodafone Idea needs it the most, while, Bharti and Reliance will also see their margin return ratios improving. And of course, Indus being linked to Vodafone Idea's prospects, improved financials for Vodafone Idea would mean that Indus will also benefit both in terms of tower addition, also on working capital, and more importantly, with the fundraise happening for Vodafone Idea, some of the server prospects of Vodafone Idea also significantly brightened.
Okay, shifting focus to what's happening in terms of the top buzzers. 361 is one stock which is actually perking up right now. That stock has managed to see a sharp spike, 7%, while Angel One has been coming off, and BSE, of course, in terms of the entire stock market related ancillaries, has had a stellar run. Not just today, I'm talking about the 52-week chart of BSE. That will tell you the kind of swift gains it's made. What's your take on that, Sandeep? Within this entire stock market ancillary world, which are the stocks you would recommend?
So right now, recommending anything is very tough given the valuations of most of these stocks. But I think in terms of competitive standpoint, obviously BSE and NSE, they are just two exchanges per se. So to that extent, BSE is the one which is listed, and that's the play. Then there's CDSL, CAMS, etc. I think all of them are decent growth stocks. Valuation, one has to decide at what price you want to buy. But I think in terms of growth visibility, I think they'll keep on growing for several years, and that will give returns to the shareholders. Now, most of them have run up, so there might be some corrections at some stage, and those can be used as opportunities to buy.
Okay, so opportunities to buy will emerge. Just need to keep tracking what's happening there. What's the view on IT? I know you've been waiting on the sidelines, be a bit negative in the IT sector and saying that whenever value emerges, you'll probably look at those counters. Do you see value emerging, especially with respect to the Infosys numbers later today, Wipro expected tomorrow?
So numbers are unknown to us, so tough to make a prediction. But I think the overall discretionary segment, spending segment doesn't look good at, and I think there's still budget cuts going on around there. The AI front, where companies are investing, I think Indian companies have been a bit behind in moving ahead on those. And given the pace at which the entire artificial intelligence segment is changing, many companies are unsure of whether they should invest now or wait or invest, etc. So I think that will weigh on performance, at least for this year, this calendar year 2024. So I think it might be premature to buy. However, these are cash generating companies which also do buybacks periodically. So if, let's say, the large cap funds correct 10-15% the current levels, I would be interested in buying them at those prices.
Okay, at 10 to 15, IGL, MGL, Gujarat Gas, all under pressure. You will use these dips to buy, perhaps?
Not really. I think I've always avoided this space because of the inconsistency of trend for these stocks. So, even last week, I think if I'm not wrong, these stocks had shown signs of a breakout for them coming out after, I think, 2-3 weeks of correction or price correction, 2-3 months price correction for themselves. But, the nature of these stocks on the medium to long term charts have always, indicated that, these stocks have an unsustainable breakout, they tend to go back to a corrective phase, come back towards retesting the breakout levels, and then even fall below. So adjusting this with a a trading kind of a play, having a key stop loss as well as a target in place could be a lot more tricky, and that's why I avoid the space.
Okay, avoiding the city gas distribution names, and the market is clearly avoiding it today given the kind of slip that we have seen. Time now to slip in a very short break, but as we do that, a quick programming note. ET Now and India's oldest stock exchange BSE celebrating BSE Day tomorrow, which is an extraordinary event that showcases the legacy and the future of the Bombay Stock Exchange. The day will commence with a ceremonial opening wherein Nikunj will have the honor of ringing the opening bell from the floors of the BSE with esteemed guests. Our keynote include Keki Mistry and Himendra Kothari alongside BSE's MD and CEO Sundara Ramamurthy. Stay tuned for our exclusive special coverage on the BSE Day tomorrow.
ET Now is getting up to celebrate BSE Day on 19th April. We're excited to welcome honored guests who will ring the opening bell. Join us along with the ET Now team and distinguished leaders from BSE for an exclusive walk down memory lane with BSE veterans. Know about the history and the story of D Street.
First thing for any business channel viewer is stock markets. Lal Street.
Tune in to ET Now on 19th April.
What a day it's turning out to be for 361, which is the wealth management arm of FL. Another wealth management arm which has got listed is Nuvama. And very few wealth management clear businesses are there. I mean, the story is very simple, folks. If India is growing, financial markets will grow, and the capacity to manage wealth is going to be there. If financial markets grow, intermediaries will grow, and these are businesses which are like toll. Doesn't matter what the market performance is, as long as you are using the services, you'll have to pay them a toll. And in a sense, a simple business model, which is that they distribute, they sell, they market, and then they offer you wealth solutions. In they make commissions, and their commissions, of course, demand means more demand, but a bad market does not mean no money comes their way. That is something which is very unique about this wealth management business. Sandeep, these are stocks where you would say, okay, I'm bullish and I'll keep buying these stocks. But at the current juncture, let's say if you buy this basket, which is a better Indian financial market growth, CDSL, BSE, MCX, or even India, Nuvama 60, can one consider making a basket of some of these stocks?
Yeah, for the long term, yeah, it's possible but I think rather than all of these wealth management outfits, I think if someone has to take a bet, AMCs would be a better bet than these companies. Because I think these companies making commissions out of clients, it's very tough to give them a high PE, and the markets are giving them an excessively high PE at this stage, which I think is unjustified.
Nestle, Sandeep, given that the stock of Nestle has fallen because of a report that, okay, there is sugar in baby food. Now, I can get into a long argument whether it is good or bad, but the fact that this is something which is unlikely to have an impact on the long-term business or the sales of Nestle baby food. The stock has fallen in reaction to news. Is it a good time to revisit a stock like Nestle?
So Nestle is one stock among the consumer stocks which actually held on. So I think it's corrected now. So it's not that it's cheap. So I think this issue should be an issue only if they do not close it and put it, which I don't think they would have done. I'm not sure about that. I don't think they would have done that. So to that extent, everyone knows what's in it. Now, consumer basket, some of the stocks are getting cheap. For example, something like HUL I was seeing in the morning. I think it's at the same level where it was in, I remember right, 2017 or 2019. I think many of these large consumer companies have gone through phases of consolidation. And I think for conservative investors, it might be reasonable to start taking small bets in them.
Let's pull up the intraday chart and the candlestick chart of the Bank Nifty, please, because that's the index which is coming under a lot of pressure right now. I think 800 to 900 points shaved off from the Bank Nifty from the highest point of the trading session. A 400-point slide coming in there. And names like ICICI Bank, Axis Bank, HDFC Bank, these are the drag on the markets right now. In fact, Axis Bank is down a solid 3% as we speak. ICICI Bank is down over 1% and HDFC Bank too. Rich, what's the view on these banking names and the banking index itself?
So the Bank Nifty continues to not be able to show that momentum. We are not seeing follow-up price action. So stocks did make a recovery, and post the current say political hits, the index has gone again into that sideways, but we are not seeing any major breakdowns. So we are back to seeing that 1,030 for Axis Bank, which ideally should hold 1,050 to 1,030 for ICICI Bank. Same way 1,450. 1480 for HDFC Bank. So for now, expecting some bit of a recovery from current levels. Overall, so expecting a bounce from here. It's a good end point for a lot of these banking names.
You know, that is the pain point where banks are just not chipping in. Sandeep, so what's the trade now? I mean, should one look at global macros? Should one look at election results? Should one look at beneficiaries of summer? Should one look at IT because TCS numbers were okay, things are bottoming out for the sector? What is the trade now for next 3-6 months?
I think the next couple of months could still be difficult given the fact that the global valuations will adjust to the fact that from expecting very aggressive rate cuts this year, there could be a possibility there will be no rate cuts. And in that scenario, the valuations of assets across the board, especially equity markets globally, could adjust. So I think that's one risk. Elections, I don't see as a risk, but we never know. So I think there will always be a 5-10% risk we have to build in, but it's tough to do that in given that the probability of a change is low at this stage. So it has to be global macros and global trends. A global correction, I don't think it's still over, and to that extent, the Indian market correction also might not be over. Now, the extent of fall can be debated, but I think if markets move another 5% down from the current levels, then I think the downside will become very limited, and at that time we could find much better value.
Another stock, Naresh, which has turned today is ICICI General, ICICI Lombard. Has the stock decisively turned? It's been more like a start and a stop kind of a stock.
So very interesting chart formation here. So if we go back to 2020 and the stock topped out around 1650 to 1680 levels. We have been pausing around that band right now. 1650 to 1730 has been the new range for the last 2 months. Today it's hit a new all-time high. So it looks like a fresh flag breakout. And it looks like finally a trend coming up after 2-3 years. For trending stock right now, I would expect it to slowly go towards 1850 to 2000. Looks like a fresh breakout and a buy at current levels.
Okay, so that's about ICICI Lombard. Of course, the earnings were quite strong. So after a couple of quarters of disappointment, they managed to surprise the street with a very strong performance, and that's the reason the stock is getting rewarded as well. In terms of the other movers right now, well, Mankind Pharma is up 5%. There's a bit of a recovery in Wockhardt as well, 5% gain coming in, and then there was positive news for the likes of Jubilant Pharma, etc. as well. Is this a space, Sandeep, you have been looking at positively?
No, small mid-cap pharma I don't invest in usually because balance sheets are very tough to analyze. So I largely stick to the larger ones like Dr. Reddy's, Sun Pharma, etc.
Indus Tower, another one which has done rather well for itself. Bharti Hexacom, recent listing from the Bharti. It's a business which is owned by a company which is owned by Bharti and the government of India. It's done well. Amara Raja, you look at the stock and you would say there is no correction in this market. However, Geo Financials, what year it's turning out to be. So there are a lot of outliers. There are a lot of outliers in the market this year, and some of these stocks have really gone against the law of gravity. Amara Raja, look at the change in this year, and when I say this year, 4 months, that's it. Not even 4 months, 3.5 months actually. And what do we have on Amara Raja? 21% return. Geo Financials, vertical line, big gain. I think is visible even in Bharti Hexacom ever since it's gone public. I think rupees.
The issue price was 570 thereabouts. Got listed with a gains of around 30%.
Got listed, yeah.
Correct.
900.
Yeah.
Sandeep, any chance you track Bharti Hexacom?
No, I'm just holding Bharti Airtel.
Okay, so Bharti Airtel is of course one stock that Sandeep is holding on, but telecom clearly is having a stellar run of late. But tell you in context of what's happening to the Vodafone FPO, we had tracked that number at 1 p.m. The FPO subscription was very paltry at just 3%. Of course, it's the first day and it's just taking off, but for now the sentiment was very strong, at least that stock is concerned. In terms of other losers, Schneider is down around 5%. You have Aegis Logistics, which is down in the trading session. Even though from the gaining side, the likes of BPCL as well as Power Grid, they have been doing quite well. Power Grid is actually up 1.5%. This is a question, Sandeep, we have been posing to ourselves as well as the experts. The power demand mismatch that we are seeing, it's going to be a very hot summer. We've already seen the indications of that. In context of that, which are the power names which you think can still probably rally from here on?
I think playing for 1 or 2 months of summer is very tough. But I think Power Grid is a decent story because it's a utility and transmission investments will continue to be strong and remain strong for several years given the real estate, renewable energy investments which are happening. Other than that, I think most of the stocks have run up so much that again, it's tough to find value across the board, although hold some transformer stocks and transmission.
The idea wasn't to play it only for the summer theme, but the reality is, Sandeep, that this power demand supply mismatch is a lot more fundamental than just, let's say, coal related or about related, because demand is increasing on a very consistent basis, and of course the supply hasn't really managed to catch up. In fact, on the discussion and on the topic of summer power demand, we did speak with a whole host of experts. Listen into their as well.
In terms of the storage is an integral component of the whole equation. If we have to replace the fossil fuel capacity, because if you need 24/7 through renewables, then storage becomes a key component of the whole equation. So we have actually plans to tender a lot of storage. So we are looking at storage also very aggressively, and we are technology agnostic on that.
And this year it is expected that around the power demand touches 260 gigawatt figure this summer. So to meet the requirement from energy side, against the production of 10 million metric ton from our Talavera mine, compared to the last financial year, in this financial year, the coal stocks at the power stations as well as mine pitheads are at peak. So I don't think that situation arises this financial year. Better situation than the last financial year.
Okay, so that's the commentary on the power demand mismatch. But time now to take the closing ideas from our technical experts. Naresh, you go first.
So that would be a buy on ICICI Lombard, which is promising stock, looking towards a breakout towards all-time high. Good consolidation done for the last 2 months. Expecting it to go towards 18.50 the short.
Okay, so ICICI Lombard. What about you, Kunal?
So I started a buy in Linde India last week. In fact, this week on Tuesday, the stock was at 6,800, 900 levels. Looks attractive as a chart. The volume set, the price setup is also very attractive. So we would continue to have a bullish view here.
Okay, on that note, Sandeep, we'll let you go. Thanks so much for making time and speaking with us. But taking a short breather on the show, don't go anywhere. When we come back, we'll track the last 30 minutes of the trading session and more importantly, the options expiry. The slip is getting a bit scary right now because we're threatening to go below the mark of 22,000. So sharp cut is what we have seen, over 300 points on an intraday basis and pretty much holding the 22,000 level by the skin of its teeth, just 8 to 9 points higher. So very possible that perhaps we'll go below the mark, even though a lot of experts were saying that it seems like we have found a floor for ourselves. And the kind of opening we had, we were very confident that we'll go higher, but looks like the tables have turned for now. 22,010 to 22,019 is where the market is right now. But one stock which saw the biggest drop in over 3 years was Nestle, and that because the reports raised concerns over the sugar levels in Nestle's baby food products sold in some low and middle income countries. Nestle India said that it reduced the sugars by up to 30% in its portfolio over the course of 5 years. But sources say that the Health Ministry has also taken notice of this concern and has started taking action on the same. Sumit, my colleague, is joining in more details on this story. Hi, Sumit.
Well, absolutely. Government sources are telling us that they're concerned over the reports, and more so, this practice is not there in developed nations. Why? In developing nations, including India, because this is something of concern. This concerns health of children. That's a very specific thing here. Also, the Consumer Affairs Ministry can also look at the issue from different perspectives, that why Nestle is not doing this thing in developed nations. They are doing it in India. So reports have come that Nestle adds sugar or honey to its baby food products, including cereals, and food and milk products. So that is something which is cause of concern. Nestle, we know, is the world's largest maker of such products, and it's a giant. But having said that, these practices, when they are not done in anywhere else in the world, why are they being done in India? That's a cause of concern. Government can look into it. What overall the developments going to be? We will keep an track of that.
There is a general awareness which is coming in. First, it was against cola, it was against QSR, then it was against
health
even
drinks and
malt essentially.
Yeah.
I mean, just about every malt, because ultimately, there's a time when sugar was a source of energy, and that is the time when you were going to what could be called as scarcity. Now, that particular composition may not work. It may have worked in 1980s, it may have worked in 1990s, but that is not something which should be a source of energy. The source of energy has to be protein, the source of energy has to be carbohydrate. So there is nothing criminal in what it is doing. It's just that it has come to notice that the compound which they make, which is called as baby food and which is the infant market, where Nestle lion market share, I think 85% market share, is it getting noticed, or it is something which now needs to be addressed? I doubt that it will have impact on the sales so much per se, because there are more health warnings which are given in the tobacco space, when it comes to cola consumption, when it comes to not eating clean food and street food, but they grow. I mean, there's a different audience, but anything which has got to do with the claim that there is food will give you energy, and if the basis of that is sugar, is something which now needs to be addressed. Sugar cannot be the source of energy. The sources of energy, at least in baby food, they have to be different. Abnish Roy, is the stuff in Nestle today justified?
Sure. So thanks for having me. Yeah. So definitely three things. One is the sell-off today. We don't see that necessarily coming out because of yesterday's development of sugar 3 grams per serving. I would say that in Nestle last few weeks, back to back, there has been some negative news flow. First, there was the news flow of cocoa cost increasing last 1 year almost 200-300%, last few months doubling. Second one was, of course, coffee cost also has been inflationary. So what we see is Nestle margin expansion in the near term is looking a bit challenging because of coffee and cocoa being high. But yes, milk cost is down, so that should definitely address partly. Second was the royalty increase, so 15 bips royalty hike every year for the next 5 years. So over 5 years time frame, 75 increase. Coming back to this sugar news, we don't see any significant impact on the sales of Nestle's products here because of 3 reasons. One is, of course, Nestle has reduced the sugar content in the last 5 years by 30% in the Indian products. So my sense is they will keep doing that. So the added sugar content has to go down, especially if you see Indian pediatricians say that below 2 years there should not be any added sugar. So I will expect that Nestle will keep on doing the local R&D team to reduce it further. Second is, if you see in India, most food products there is added sugar. So I would say in developing countries, because of the pricing challenge versus say developed countries where that issue is not there, there is a added sugar in most food products. So I would say that as we transition towards tougher regulation and definitely per capita income improves, gradually that journey will happen. But I don't see that near term any big regulation is there because of this, because this is not something like lead or something like that. This is sugar which is there in most of the food products which we consume. But yes, the journey will be there from the Nestle's local R&D team. This is what we'll definitely expect. So net, we don't see this as a big concern on the numbers, but yes, back-to-back 3 negative news flow has happened in the last few weeks. That's why the stock is correcting. In the food space, we'll prefer Tata Consumer, and even Britannia from 1 year perspective is looking decent. Versus Nestle, where currently these 2-3 issues are there.
So what's a good price to, let's say, buy Nestle? I distinctly remember when the whole Maggie issue happened a couple of years ago, those who bought when Nestle fell after the Maggie issue, they were rewarded.
So 2 things. One, this is nowhere comparable to Nestle Maggie issue. In Nestle Maggie issue, if you remember, it was lead, etc., and the regulators banned the product. There were many quarters where the product had faced issue of supply. Here, there is nothing like that. This is sugar. We all consume sugar, so I don't think the 2 things can be compared. Second is, Nestle stock has not really affected too much. Today, it might be down 4%, but if you see from the peak levels and last 1 year, 3 year performance of Nestle stock has been very good in the broader FMCG, where FMCG sector has been generally out of flavor with the investors a bit. Of course, there have been stocks like Tata Consumer, Varun Beverages, etc., which have done really well in the space. Nestle stock has also done well. So you have to see that this 4% correction and maybe 10% correction from the top, this is not very big, warrant a immediate interest from the investors. My sense is in the next 1 or 2 quarters, some more time correction can happen as investors understand the cocoa cost, the higher royalty cost, those things, how do they pan out. But from a near-term perspective, I think Nestle's sales and EBITDA growth will still be decent. But my sense is depreciation cost for Nestle could go a bit higher because they are coming in new factories also. So that is also one more slight concern, that depreciation cost will be on the higher side in the coming quarters.
Okay, so all of you who are getting a deja vu feeling of the Maggie controversy, well, Abhi saying it's nowhere near the earlier controversy. This is much different, and perhaps this slip that we are seeing in the stock price today is a bit overdone. Thank you so much, Abneesh, for making time and speaking with us today. In the meantime, this market has taken a bigger knock. We are well below the mark of 22,000 on the Nifty. Sharp cuts across the board. The advance decline ratio has turned a bit more negative, and while earlier most of the sectors were in the green barring IT, right now all the sectors are actually in the red, barring a media which is made up of small names. Other than that, most of the sectors are in the red. FMCG is down quite a bit. You have autos in the reverse gear, pharma, banking index, metals, all of these are coming under a lot of pressure right now, and it's the banking throughout. So in ICICI and Axis, HDFC, they are the top 3 drags on the markets, and then ITC and Titan as well are coming under pressure. Names like Bharti, which were up around 5%, has cooled off, and even Grid has cooled off substantially, and ditto can be said for Reliance as well. At one point of time, it was above the mark of 1% gain. Right now, pretty much flat, actually in the red right now for Reliance. But before we take it across to Gurmeet, Nuresh, what's your view on the markets right now? This below the mark of 22,000, how big a damage could it be for the near-term sentiment on the market?
So could be a contra at current levels. We've seen some bit of a downtick come in indices with some possible announcement across the geopolitical, but we've not seen a similar tick happen in Dow Jones or the European index, as well as on crude oil as such. And from tomorrow, elections also start. There could be some adjustment. So at current levels, the risk reward is good, wherein one could have a plus below 21,800 and expect a bounce back towards 22,400 odd levels. So this dip below 22,000 is a buying opportunity, is my view.
Gurmeet Chadda joins us now. Hello, G, long time. You've been coming on the channel, but I've been missing interacting with you on the channel. Let me put it this way.
Always the power.
Would you buy Nestle? I mean, reminds me of the Maggi controversy. The news was not big, but the stock fell. The news on Nestle sugar products is not something which is going to change their sales dramatically. We all know that there is sugar in cola. We all know there is sugar in mithai. We all know there is sugar in a milkshake. I'm not even getting into how much sugar is there in a typical cold coffee or a coffee which you drink. But that does not stop us.
So I think even without the sugar news, wouldn't have probably bought Nestle. You will not buy even these markets when interest rates are still high. 10-year rate in US is 4.6. Our 10-year yield is above 7. I mean, it's not a great idea to buy 70, 80 earning multiple stocks on a trailing basis and 55, 60 times on a forward basis where top line growth is in single digit. I think last quarter they had a huge jump in gross margins almost 400 bips on product mix and soft material cost. And good, this issue is not just confined to sugar. About differentiation between what you do in a developed market and what you do in a emerging market. To me, that is more to do with how you believe how a market has to be addressed rather than So I think better options. In some of the Indian companies have done well in Tata Consumer. We are actually going level 2 now. So government has made rPET mandatory up to 30%. So all your bottles and packaging, food packaging, need to have recycled content up to 30%. And the deadline starts next year. And then after that, there is penalty. So there's a very limited company for doing that. So one company we like is Ecosphere, which is into rPET. It also does RSPF for textiles. We are seeing that recycled material being used in textiles also. So something which is a good ESG play, a very small company, reasonable market valuation. That is something we are adding. And we will look at some of the other names, including Marico, including Godrej Consumer, where there has been a change in leadership. So we like those names. And I also like QSR, not really related to this space, but you're right now getting the entire QSR space at 60,000 crore market cap, which is even less than that of Cipla. I think this space is only going to do well.
No, I heard Tata Consumer, Godrej Consumer, which is the other small company, we completely missed it.
Ganesha Ecosphere, it's into basically rPET. They supply, they're into recycling PET. rPET, they supply basically waste management. It's the recycle waste. They have a 20% market share, and that's being used for food packaging, PET bottles. So Coke, Pepsi, Varun Beverages, everyone, everything is done through that. And government has made a guideline that the content you use for PET, 30% has to be recycled content. And there's not enough capacities right now except this company. So that's a proxy play to FMCG and food consumption coming through, bit of recycling, which is ESG play, and the food packaging.
Okay, so that's an interesting name that Gurmeet has fished out for us. But hold that thought, Gurmeet. Let's take it across to my colleague Ansh. He's joining us to talk to us about which are the big price volume buzzers which are in action right now. Ansh.
Right, so Jal will be the first stock in focus. As you can see in the chart as well, the stock has a breakout from its key horizontal resistance of around 940 level, which was intact from last 3 months. The breakout was also led by volume of 50 times its average trading volume of last 20 sessions, indicating very strong participation in today's up move. Apart from this, Timken will also focus. As you can see in the chart, stock has given a breakout from its handle chart pattern, surpassing its DMA along with good volume of over 2.8 times its average trading volume of last 10 sessions. Lastly, Martin will be in focus as the stock has actually given a breakout from its consolidation of last 10 sessions, touching 2-month high level with volume of over 3 times its average trading volume of last 10 sessions. So keep an eye on the stocks.
Gone below 22,000. No, not there actually. 22,000 is intact. Nuresh, is this the Lakshya Rekha? Psychologically, 22,000, just remember this number, go below that, start selling, stay above that, start buying?
Not really. The last swing low is 21,728, 21,800. So at current levels of 21,950 to 22,000, you have a 150 pointer stop to be placed and expect a bounce back. The reason I expect a bounce back is we've not seen a similar downtick of almost 250, 300 points, 1% on the Nifty being seen in the global indices. In a geopolitical announcement area, we generally see a lot of correlation continue. Looks like some bit of selling, which is purely in our markets. So could be a contra trade here. It's only below 21,700, 21,800 where the trend changes, which is the last major swing low.
Gurmeet, so tell us a bit more about your three biggest large cap and 3 biggest mid cap holdings.
So I think we are adding, we're being a little counter-cyclical here, adding some ITC in large caps. We're building more to HDFC Bank after the quarter date. I think probably we are probably 1 quarter more. The deposit mobilization was pretty good. Probably we get once the numbers come in this week. We are adding HCL Tech. One company we believe in, large IT, which is better mix. A lot of the are non-discretionary, so it's IT services, it's ERD, and then they have product and platform business, which is a very high margin business that they do pretty well. And something which migrates more towards IP and not just IT services, I think direction looks good. In mid caps, we've added some market participants on corrections, including CAMS, CDSL, market infrastructure services players. We added a bit in one of the food packaging name I discussed with you. We are adding some auto ancillary names as well, like Sandhar Technology. I think this Tesla coming to India will have a very positive impact on with the localization playing out over the next 2-3 years. Let's see what the plans Tesla has. So we have Uno Minda, we have Sona BLW, we have Sandhar Technology in the portfolio, and slightly trying to nibble into mid-cap IT where there's been a large correction like KPIT Technologies.
Okay, KPIT Tech, Sandhar Technologies, Ganesh Ecosphere, these are some of the names that Gurmeet is looking at adding in the portfolio. But in the meantime, the fall in the market is getting a lot more accentuated right now. Take a look at Bank Nifty. It's below the mark 47,000. So at one point of time, just last week, we were talking about 50,000 on the Bank Nifty. It's quickly given up almost 3,000 points. And even for Nifty, the frontline index, we've lost what 8 to 900 points in the matter of 4 to 5 days. So very sharp correction is what we have in hands. The question is whether it's only temporary, whether it's just related to expiry, or is there something bigger? Because I'm taking a look at the global markets. For now, the US markets are still in the green, not by a whole lot, but there is no big pressure coming in. Even the European markets are a bit in the green, whether it's the French CAC, the UK FTSE, both of those indices are in the green right now, while DAX has just managed to flatten out a bit. We'll discuss the market mood right now in a bit, but first let me take it across and get a sense how the dealing room mood has changed. Sharad, what is the dealing room chatter like?
Well, yes, from the dealers desk, what we are hearing is Aarti Pharma Labs HNI has been consistent over the last 3 to 4 sessions. As to also, we are seeing a strong buying coming in. Now, the volumes itself is picked up 3 times its 20-day average, and stock is up 17% over the last 5 trading sessions. We did a bit of channel check, and what we are gathering from our sources is that importantly, the CDMO business inquiries have picked up, and an interesting product, caffeine, that is also the company makes it as a finished goods as well, and the demand for caffeine related products, especially in the usage of cooling, has picked up, and because of that, the caffeine prices actually in the market has also picked up from almost 800 to 900 rupees per kg to almost 700 to 1200 rupees per kg as per our channel checks. Interestingly, the company is expected to deliver strong results as well, especially in the fourth quarter part. Apart from this, also the dealers have stated that there is a basket buying from certain domestic institutions in the mid-cap pharma space as well, and the institutional interest already was there in the large cap space when it comes to pharma companies.
Okay, so that's about Aarti Pharma Labs clearly holding out with a 7% gain in a market which is otherwise tumbling away. But actually, let's pull up the mid-cap and small-cap and see if the pressure is at a similar level as the frontline index, or is it largely related to large caps? No, so there's a bit of a pressure on the mid-cap and small-cap as well. Of course, not as bad as the frontline index is doing, because those are down 1%. These are holding on with cuts of around 0.2 to 0.3%. Nifty actually down 0.6%. From the highs of the day, it's down 1.25%. But waiting by for the earnings from the likes of Infosys and Bajaj Auto, let me ask you, Gurmeet, as to what are your own expectations, or what are you watching out for come Infosys as well as Bajaj Auto for the IT and auto sector respectively?
I think I've been looking for the deal TCV and the guidance they gave. I think that's something I will be looking at. I think the TCS numbers were good. They got a little bit overshadowed by the Israel-Iran conflict. I think the numbers are pretty good in an environment like this. I think one feedback we are getting from a lot of headhunters and is that the IT hiring is coming back selectively, and there is some recovery also being seen in banking and some of the other verticals. So let's see. I think it will get very differentiated now. You'll have companies which are not doing too well still, and there are companies who are actually coming out and doing well. So I expect I think valuations have become reasonable. It has corrected again after hitting those 16 levels, especially in so let's see how things come up. I personally probably think HCL is more reasonably valued in large versus IP with a better mix. But let's see. Bajaj Auto, I think because of the buyback, and I think the price probably captures a lot of positive things. I think the rural economy is a touch soft, so we don't have that in the portfolio. But as I said, I would prefer the auto ancillary route to play auto largely at these valuations because most of the OEMs, passenger car makers especially, are quite a bit.
So HCL Tech is better placed within the IT universe, and auto OEMs is the preferred place for Gurmeet at this point of time. Naresh, wanted your take regarding the city gas distribution companies. Kunal is saying that he doesn't want to make a bet either way on these names, but IGL is down almost 6%. HCL is coming under pressure. Gujarat Gas is down. Anything that you are spotting worth trade within this basket?
So it's been a tough sector to trade. So if you look at IGL, we are still at pre-COVID prices. So the stock has gone nowhere. The stock has been at this 450, 500 multiple times. So there has been no trend, so would avoid. The only one which out of these names which has been a clear trend is Mahanagar Gas, but that has also a lot of volatility. So on dips, Mahanagar Gas would be still okay, but avoid an IGL Gujarat Gas purely for the reasons of no great as such.
I don't think we have chatted about the telecom sector, right? Any view on this Bharti Hexacom, the latest IPO which happened, and the kind of stock price move we've already seen, and Vodafone IPO? Are you betting on that?
That's to me, Anisha?
Yes, Gurmeet, the question is to you.
Yeah. So been very constructive on Bharti for a while now. I think the stock has seen good re-rating as well. Industry leading ARPUs now. Their digital portfolio is doing well. If you see last few quarters, they've been adding almost 6 to 7 million in 4G, 5G. So almost now in the overall consumer mix, 75% is 4G, 5G. In a lot of circles, especially the 7 circles, the 5G additions have been pretty solid. I also think that there is an opportunity in home broadband business. So if you see, for example, Geo platform currently is valued about $150 billion. As per the market where the deal making happens, Bharti can't be at 50%. It actually crossed ICICI Bank market cap. I think it's headed higher. Vodafone, I think the amount is too low, and I'm a little concerned on the equity dilution. And if government dues get converted to equity, probably a government owning it at almost 80%. So while I think it removes some doubt on it being a going concern, I don't know how much of value is there for the stakeholders in the current debt. And they right now need to still add 5G and spend more on network expansion as well, add more sites. So I would prefer Bharti, and I think in that space, very constructive on Bharti, one of our large holdings, top holdings in the large cap space.
So Bharti Airtel is something that Gurmeet really likes. For phone, as is the concern for rest of the people as well, equity dilution. But what's the answer that the management has to this question of equity dilution as well as the way forward for the company? Listen into what Vodafone Idea CEO told my colleague Ajay Sharma, and also a whole host of corporates joined us today, right from Ajaz Dial to Brigade Enterprises as well as Talbros. Listen into those key takeaways as well.
If I were to say there are multiple answers for the telecom industry, and telecom is a complex operation, but if you ask me what is the reason why we continue to lose subscribers disproportionately, there's only one reason: lack of 4G coverage, and it's quite significant, and because we could not invest after the AGR judgment. Now the point is that as we make these investments today, if you will see, our share of customer acquisitions is already higher than our customer market share, which is something which most people don't realize, which means we are able to attract customers without difficulty. Wherever we have a service and a coverage of 4G coverage, customers are coming to us. Our problem is where we don't have coverage. Either if a 2G subscriber wants to upgrade to 4G, the only choice with them is to move to competition. Also, subscribers like yourself who are very happy with our services in Bombay, but you travel to parts of the country where there's no 4G coverage, then you would also think about changing your service provider.
So this year, as a business, we focused on getting our growth at minimal cost. Top line grew about 23% for full year and 6% plus for fourth quarter, and costs have been very well controlled. So this is what has overall led to margin expansion. And for next full year, while we don't issue any formal guidance, we think we should be above 25% plus margin. So despite whatever is the health of SMEs in the ecosystem, we are targeting that for next full year, we should be growing at 15% plus for top line.
Coming year, we have said we are at least looking to launch another healthy pipeline. at least 10 to 12 million square feet. We expect all the segments to grow in parallel to each other, and we believe that this trend will continue. We will continue to build more office tech parks. I think we said we will to launch at least 6 million square feet of office. I've also mentioned earlier that we will be launching 5 hotels sometime this year.
We are expecting a growth of 18-20% in our businesses altogether, and some businesses will be more than 20%, some will be 18%, some will be 15%. So average 18-20% growth we are looking at the business. Of course, the more orders from the European countries we are getting in EV because they are trying to launch the vehicles in 25 and 26. And from domestic front also we are getting not very big orders, but small order for EV. Target is our total top line of 2,000 crore, 12% will be EV business, more than 12% will be EV business. Target by time on FI.
Those were the newsmakers on ET. On that note, we let you go, Gurmeet. Thanks so much for making time and speaking with us today. So, recovery, we are back above 22,000 for what it's worth. A 50.6 recovery from the lows of the day is what we have seen for now. Let's see where we go from here on. But quickly, let's take the BDSC trades.
So, still go with 2 buy calls. The first one is about Aurobindo Pharma. That stock is looking attractive as a breakout. So, would suggest a buy with 1150 as a target. Stop loss could be kept at 100. And PVR Inox is the other name which is coming out of a major correction. It's a consolidation. So, showing a lot of strength today. Would we expect this to be a start of a decent uptrend for the stock? 1480 as a target and stop loss at 1400.
Okay, Naresh, what about you?
So that would be a buy first on ICICI, which is close to a new all-time high. Stop loss at 1700, target price of 780. Second is a buy on content consumer, showing good relative strength here. Stop loss 95, target price of 310.
So those are the top recommendations coming in. Thank you guys, Kunal as well as Naresh, for joining us today. But taking it across and handing it over to Vinny for the market close.
At least above 22,000 levels is what the Nifty is at, down 0.5%. Slight bit of a recovery, but we had seen a sharp fall in the second half of the day for the markets. So Sensex also a sharp fall that coming in at one point of time. Also Sensex had seen a very sharp fall. Bit of a recovery there, 72,570 levels, while Nifty 22,030 approximately levels what it's closing at. Nifty Bank 2 clearly under pressure today and 70% decline there. We've seen all the bank names, ICICI Bank, HDFC Bank, Axis Bank among the top contributors in terms of the draggers that they've been for the market on the Nifty 50 was the banking sector. Other than that, we do have ITC as well as Titan, which have seen a sharp fall as well and contributing to the decline. And the downside to the market was because of these stocks. So yes, that's how the movers are there in terms of the Nifty 50. But a lot of movers mid and small cap that managed to hold on to some bit of the positive side, some bit of a green. So let's pull up what the Nifty mid cap and Nifty small cap, where are they going to be closing as well. And seems like at least the Nifty mid cap not that much of a decline, down almost 0.2% in trade, while the small cap is almost flattish is what it will be closing at. But let's not forget, small cap was up as much as 1%, more than 1% at one point of time, as trading quite strong. But yes, that is what it's given up. Let's pull up some of the movers in trade today. We have MAC, which is in focus as well. Then we had 361 VAM, which saw a sharp uptick in trade today. Also, we'll watch out for why, but 361 was among the top gainers. Other than that, Sterling Tools, that also saw a very good up as well. And Nestle, clear pressure that came in on the FMCG pack for Nestle today. ICICI Lombard, Just Dial, Angel One among the movers due to their earnings. Brigade, Sunteck Realty holding on to gains because of their Q4 updates. While other than that, we had Talbro Soto, Power Grid, Hitachi, which managed to hold on to gains, as well as Schneider actually saw a bit of a decline after Goldman Sachs report. Vodafone Idea, Indian Towers and Bharti Airtel among the telecom names which have been buzzing, but closing the day, at least for the Nifty, about the 22,000 levels, down 5%.